Deputy Murphy.
Thank you, Chair, and thank you to Ms. Feely and your colleagues for attending today. I just wanted to touch on 4 areas very briefly. And the first is picking up where others have left off in relation to the local property tax statistics. When you took over this responsibility, when this new tax was introduced, in terms of resources, how did that impact upon revenue?
Badly.
Were you given additional resources to manage this?
Yeah, we were given an additional 100 headcount, and we were given a perfectly adequate budget. By the way, I should say that. The issue was human resources. So we got an additional 100 staff. It has soaked up quite a bit more than that, and so we now will have to see. I'm not hugely surprised about that. I think 100 was always too little, but we took it, and it has impacted on some of our other areas, not hopefully in a terminal way. I hope we'll be able to rectify that in the course of the first half of this year. So I think we had to accept an impact because it was such a big change for us and for property owners. And the bigger problem for us is that we remain subject to the employment control framework. So while we were given an additional 100 staff, our headcount number overall had to come down as well. So it's been eaten up. In the course of this year, we'll be back where we started.
And are you making a request for additional staff?
I make these requests periodically in the context of business need. The most recent request we made was in relation to the need to hire really significantly skilled technical people to help us with the work on base erosion and profit shifting for the OECD, and that was approved. Since the government employment control framework structure came in, and that began with 2010 with the previous government, we have received sanction to recruit 600 people. So when we ask, we get a hearing some of the time.
Okay, and because earlier you were talking about the data available to you from the property tax returns and how you'd like to do more work with it when you have time. So are you requesting staff to do that kind of work? Is that in the pipeline?
I think if we were looking for staff in the context of compliance work, quite honestly, if we were doing it on return on investment, we would be looking at the other taxes long before we would look at local property tax. What I meant in relation, because I mean the actual property tax charge is small. What I meant in relation to, in our earlier conversation about projects, I think there is interesting intelligence that can be divined by analysing property tax information with tax returns made in the past to see, is there evidence of mismatches, lifestyle mismatches, bank accounts, cash, that we could ask a question about where the person may have got the funds for such a property. But the focus would be the other taxes. It's the property tax data.
You'd be using that to feed into your
would help us. So, so I see value in it. I see that being useful for project work in the coming years from that point of view.
Okay.
And we're always looking for additional staff. I write to DPER regularly. Well, I suppose, to be fair, what happens is when the estimate is being set for us for the vote for the year, there is an engagement. Maybe it's not always in writing. There's an engagement where we set out our stall. There's a negotiation. We get what we get.
Okay.
And then we move on.
Okay. In relation to the household charge that preceded the LPT, you took over responsibility for that. What's the compliance rate with that at this stage?
Well, the position, we took over responsibility, or at least it was given to us, maybe we read away to put it, last summer. We haven't touched this tax until now in terms of meaningful compliance work. So the Local Government Management Agency report that they have a different way of measuring the compliance rate. It's 1.2 million properties. Is that right? They have a compliance figure of 1.2 million properties, and we have a compliance figure for local property tax of 1.6.
Is yours more accurate, your figure? Is your figure more accurate?
Well, our figure is bigger, and it's certainly, in our terms, it's more accurate because we're working from our register. But they have different exemptions that we didn't have. The unfinished estates regulations for those were considerably wider than for property tax. So they're not quite matchable. as a compliance rate. But what I can tell you is that the unpaid household charge is now local property tax. So we will now be developing our own metrics around it. And we have about 460,000 properties in our sites that have paid local property tax and don't appear to have paid the household charge.
So how would that work then? You'd go and you'd add an additional charge to them? To their
The additional
property
charge
tax?
has already been added to their LPT account. If a person goes online and looks up their LPT account right now and they see a figure there of €200 of local property tax, that's actually household charge.
Okay.
Because the legal position is it's now LPT.
And so if they don't cover that €200, they then fall into non-compliance
And
with
if
the
they,
LPT?
we're now telling them and advising them to cover that by the end of March, or there will also be an interest charge added to it.
Okay. And so when we look at figures in the document in terms of compliance rates generally, that would include people where the household charge wasn't paid initially but has been rolled into the LPT and has been paid?
Yeah.
Okay. Just
We had
information.
very interesting, though, reaction to the household charge in some respects. I mean, this became our responsibility on the 1st of July. And on the 1st of July, before that, you could have paid €142. On the 1st of July, somebody walked into one of our offices to pay 200.
Okay.
And we've been getting without doing anything, because this is the first time we've gone out and said, we're now ready to do compliance work on the household charge without doing any work at all. We've collected an amount of household charge, which is 2.7 million, lodged with us since the 1st of July in respect of 13,000 properties, without us asking.
And those people lodging that money are people who are in compliance with their first LPT payments?
I think that's a reasonable conclusion.
Yeah, okay.
Yeah.
And so, I mean, how do you interpret that then? People
Oh,
who,
well, I think the way of interpreting it is that having complied with their LPT obligations, they recognised that they could very easily be found when we came to do the household charge, so they decided to get it out of the way.
perhaps they're waiting to see how things would develop. Maybe they were unsure of whether the tax would settle or stick, maybe. Would that be
Perhaps
fair?
they thought that the household charge wouldn't remain once the uncertainty arose around who would do it. I don't know, but I don't understand the psychology that could have paid 142 in June and paid 200 in July.
Yeah.
But that's what happened. And as 13,200 more of them since then, without us having to do anything.
That's very good. Just in relation to the document, and thank you for the detail, I think it's great to note the compliance rates are so high. Also, I think the 76% online returns is excellent. And also the change that we're seeing in the payment types and the methods is a positive one. And I think it's to be a benefit to revenue. In relation, though, to the legislation for LPT, the 2012 Act, and the Section 8 reinterpretation, when will we have identified everyone who bought in 2013 and will be exempt under Section 8?
I hope we'll have that job finished by April. Is that what we're saying? April. I hope we'll have that job finished by April. And then we will be contacting the people in question and asking them to make a declaration, and we'll give them a refund. But as of yesterday, they can now self-claim that exemption online.
Okay.
It literally only went live yesterday, if I'm not mistaken. So we haven't had a chance to publicise that just yet. But that's another... and there are detailed FAQs on the website since yesterday.
Okay.
So that can now be self-claimed as an exemption online. And if people have already complied for 2014 and they self-claim, clearly they'll be due a refund, and that will be automatically generated. If they have filled in a single debit authority, and if they go online to claim this exemption now, if they do it before the 10th or 11th of March, the date that the Collector General mentioned earlier, we will make sure that the SDA doesn't trigger, so that we won't touch their bank account. So there's now an opportunity for that group of people to self-claim, but in any event, we will write to them if they haven't done so. And we expect to be ready to do that work in April.
But do we have any indicative figures now in terms of the potential loss of revenue to the state?
No, we're not putting a figure on it until we finish the work. Okay. There are conditions around it. I mean, it isn't just as simple as everybody who bought a property. So we'll put a figure on it in April when we've finished doing the work. I think it's the safest thing to do.
Okay, thank you. Just to move to another area now briefly in terms of projected distribution of income earners. And I have figures here from 2012, and I'm just wondering if you don't have the figures now, maybe you could provide us with an update later. But the figures here relate to the number of people who are employed and earning an income but exempt from paying income tax. 2012 was 37.7%. Those in employment earning income and paying tax at the standard rate, it was 43.7%, and those paying at the higher rate was 18.6%. Do you have updated information for 2013 to hand, or?
I certainly have some figures on the people that are not paying, the proportions of people that are not paying income tax. I may not have the distribution figure that you want, but I can certainly get it for you. My recollection is that the figure not paying now is about 40%. Have I got that correct? No tax or no USC is 24%, but tax alone, I think, is about 39% pay no income tax. This is 2013 figures. So 24% pay no, of all income earners pay no tax or no universal social charge, and 39% pay no income tax.
Okay. And do you not?
A distribution, I mean, I have some headline figures. The top 1% of our cases account for 20% of the tax. The top earning 10% of total cases account for 59% of the tax that we collect. Mm-hmm. And that's for income tax only. When you combine it with USC, the 20 becomes 19, and the 59 becomes 55. Okay. So those are kind of broad figures, but I don't have a granular distribution with me. Have you got it there? That's for 2012. The deputy has 2012.
You don't have do you have a table giving the changes in these figures from, say, 2008 even, going up to 2013?
In those headline figures?
Yeah.
I don't think so. Not here. But I can get it to you.
It would just be interesting.
I just brought the current year with me.
No, absolutely. But it would be interesting to get a breakdown of the percentage of earners, say, earning over 100,000, how many people that equates to, how much income they earn, and then how much income tax they pay as a result. Because I think I remember seeing previous figures where it was the top 5% earning 20% of the income but paying 45% of the tax, just to be bold with the figures. But it would be good to see how that pattern's been moving over the past number of years.
Certainly.
And what's projected.
Yeah, we have a 20. I think it would be better to write it, because I could be reading out figures.
If you could, yeah, no, that'd be absolutely fine. Yeah.
You can give that, sure.
Yeah.
Just as a copy.
Yeah.
Yeah. Thank you.
The changes are marginal, and I think the most significant point is the interplay with the universal social charge, because that's a significant change if you go back to, say, 2008 when it wasn't there. And that's why we distinguish between income tax only and income tax with USC. Because the USC, reaches down deeper into the income cohorts than income tax. So that's probably, if you looked at a trend, the most significant trend would be the reaching down of the universal social charge. But we'll get a proper table, and we'll copy it and send it to you. As you can see it there, there's a lot of numbers on it.
Okay, thank you. Just the third area I wanted to look at was in relation to your relationship with the Department of Finance.
Yeah.
Do you advise the department on policy matters?
Yes.
You do?
And we advise them in the sense that we give them our opinion.
Okay.
Sometimes we give it to them when they ask for it, sometimes even before they ask for it.
Yeah.
But we also would advise them, and I suppose our advice would be more around the technical implementability of policy issues.
Okay.
Rather than pure policy. But we would be part of a discussion, and for example, we would be full members of the tax strategy group. So we're part of the policy discussion.
Is there room to dissent from a decision that's being made, or in the course of a decision being put together?
Oh yeah, absolutely.
Okay. And that's noted, or is that?
I think it probably would depend on how deep the dissent was. I mean, if I thought something was really, really problematic, I might commit it to writing. But our job is very clear. I mean, we have a really good relationship with the Department of Finance, and it operates on a kind of a symbiotic basis. But at the end of the discussion, we're clear about our roles. Mm-hmm. They make the policy, and it's our job to implement it. So we might say we think that's a silly way to do it, or that's an expensive way to do it. We would make our arguments. The policy decision is made by the government, and then we implement that. We're very clear. So there's opportunities to dissent and debate and suggest But then there's a decision, and that's off we go.
But you're not just advising on mechanics, though, or are you advising on actual policy? For example, say it's 2008 and the decision is to increase corporate gains tax, and the yield that will be given is this increased amount. I mean, can you sit there and go, well, actually, that's not going to happen, or that's not a sensible policy change?
If we felt that the arithmetic wasn't appropriate, we would say this is our view. If we felt that there were risks attached to the policy, we would outline the risks. A lot of this takes place in an engagement. There are meetings. I mean, for example, I already had a start of year meeting with the Department of Finance where we outlined issues that are on both our agendas for the year. So a lot of that takes place in meetings, and we will explain our view of the risks that need to be mitigated if that policy is pursued. They'll accept some of our advice, others they won't. It's kind of part of the normal cut and thrust.
Yeah.
But most of it takes place at official level, and we're very clear that the policy dossier is theirs, and the policy decision is the ministers and the government's, and it's our job to implement the law.
And do you interpret figures for the department as well? You'd say,
if we can help, we do.
Okay.
But we don't. In terms of forecasting and so on, we provide them with a lot of data. We'll tell them what we think the data is telling us, and then they make their forecasts based on that. So we certainly, if we can help by giving them our view of what the figures are saying about what's going on in the economy, or that we do, yeah.
Okay. And just, if I can ask about a couple of specific figures. If you look at income tax and PRSI, it accounts for 82% of all direct taxes. And going back to 2007, it was 70% of all direct taxes. I mean, do you know in comparison to other jurisdictions, is that a high figure for... The most significant contributor to that increase is universal social charge. And levies like that, and solidarity levies and that, exist in many jurisdictions in times of difficulty. The proportions of, I think it's probably, I don't know off the top of my head, I'll give you an opinion, but don't hold me to it, and if you like I can drop you a line about it. I would have thought that it might even be slightly on the low side, because we have a high proportion of our tax base is indirect taxation, and that is higher than others. So if we're higher than others on the indirect, it follows that they must be higher than us on the direct. Yeah.
And so, like I think it's something like 46% of our tax revenues collectively between excises and VAT are on the indirect taxes side. And that's, that was a bit higher when the income tax figure was lower. So I'm pretty sure that I'm correct in saying that actually in other jurisdictions, the proportion that's due to income tax, if you include things like universal charges, which these figures do, we're probably still a bit behind the curve from some countries, but I can get you that data.
And then in relation to like the value added tax VAT and the increase in that, were you surprised to see that there was actually an increased amount then coming in from that increase to 23%?
Not in the last half year, because there was clearly increased economic activity behind it. As long as we're not too far out of line with the United Kingdom to do with frontier and cross-border purchases, the higher rate is not as problematic as it might seem. Most jurisdictions across the European Union in the last 5 years, in search of money, have increased their VAT rates. I don't think we're far off the average now. The highest rate allowed under EU rules is 25%, and more countries have been moving into the high 20s, between 20 and 25. So I'm pretty sure we're not far off the average now. But the critical one for us in terms of risk in that regard is whether there would be cross-border shopping and so on. And with sterling differences, it hasn't presented a difficulty in the last couple of years. It did a few years past. If you remember, the UK brought their VAT rate down, and that certainly had an impact. And
that's the biggest consideration.
Then they restored it, so we're pretty well back where we started. Is that okay? Have I? Yeah.
But then at the same time, if we look at like CGT is increasing, but the yield from it's falling. So
Well,
we're in the wrong direction with that.
I guess that's more to do with the fact that people aren't making gains. I mean, property prices, share prices, markets, and particularly then people whose business, who deal in shares and so on, they would have a lot of losses if they had shares in, say, financial institutions and so on. They would be offsetting against new emerging gains. So I think that the CGT fall is more to do with the fact that there aren't actual taxable gains than the rate. But at the same time, it's getting on the high side, and it's something we need to watch. Arbitrage between income tax and capital gains tax is one of the risk areas for us. So in some ways, the higher it is, the nearer it is to the income tax rate, the less arbitrage there is. In some respects, it works for us in managing the risk. But right now, I'm pretty confident that the reason for the decline in capital gains tax receipts has to do with the fact that there aren't any gains, or there aren't as many gains to tax.
Okay. And then in that area with capital gains tax, and just to go back to your relationship with the department, you might off your own bat go to them with proposals on CGT for changes.
We would go
based
to
on
them
the figures that you see.
every year. We have a list which we bring to the department of changes we want to propose. A lot of them are technical, but some of them are to do with mitigating risk. So if we thought that the tax rates were exposing us to a risk, then we would come at the rates. But normally the rates is off our page. Rates are not something that we would take a view on. We take it, that's the department's position, to take a view on them, unless we felt that the rate was exposing a risk that we would have difficulty managing. We would say, there's a risk in that, here's our view, and then, as I said earlier, they'll make the decision.
Okay, thank you. And just the last area I wanted to ask a question about, if I might, Chair, is in relation to your website and the, I think it's the PAYE easy zone for people.
PAYE anytime?
Anytime, sorry, yeah. On that, there's a budget calculator, but I couldn't access it because I didn't have an account set up. What does that do?
Budget calculator.
Do you know?
Declan will know what it is.
Yeah, it's where at the start of a year, a person can put in their salary on a weekly basis or an annual basis, and it will do a calculation, approximate calculation about the take-home pay for the following year. Okay. So it's a point-in-time application, so which we refresh at the start of each year. So
it calculates for the individual the amount of taxes they'll pay in a year in euros and cents.
And does certain estimates on PRSI and so on, and gets to your net take-home pay.
And have you thought about adding to that calculator by giving a tax transparency element to it, by giving the person then a breakdown of how those taxes are spent in euros and cents per department? Something I've been pushing for a while. Yeah. It's a very simple thing to do. I've got it on my own website, but I'm just not sure why Revenue doesn't give that kind of information directly to people in a proactive way.
I'm familiar, in fact I've seen your own calculator, and there's also a similar one put out by publicpolicy.ie, which is also very good. This goes, I suppose, to the policy discussion we were having. We take the view in Revenue that we actually have no role in deciding how it's spent. And therefore, for us to say to a taxpayer, we, the tax collector, is telling you how your money is going to be spent, is kind of tricky space for us. Because we don't have any control, or should we have any control over how it's spent. So we haven't gone there, but I think we could probably, in the fullness of time, especially if there was an official one somewhere, my view is we could provide such a link, and we could say to people, there is information available on how government expenditure applies across, say, for example, health, education, which are the kind of models that you've used and that public policy has used across sectors. And here's where you find that information. So that would be my preference, because of the fact that we really haven't any role, and it's getting into that policy space of what's our job. There's a minister responsible for public expenditure. Not only is it not us, but it's not even our minister. Yeah. And that brings us into a place that I'm just not sure is ours. But as a public information piece, if there was an official calculator, I think the way to do it would be for us to say, and there's a link.
Okay.
And off you go.
As in, you've calculated your figure in terms of taxes paid, take that figure, follow this link, and will tell you, or they will tell you how it's then spent.
Yeah, I mean, several of the calculators that exist, and there's a nice one in the UK as well that has a slider where you can slide it, and if my income goes up, how much more will go into education. So there are various ones of these around, and we'd be very happy, I think, if there was one that had some kind of official brand to provide the link. And I think that would be probably the right distribution of roles.
Okay, thank you. Thank you,
Then
Chair.
you could offer it on your website, is that it?
There as well, yeah. Tweet us, yeah.
Yeah.
Great.
Um,